Good afternoon, Campbell McCrary here, Amvest Capital, Amvest Capital, New York City. Welcome to Amvest Capital Inc. live webinar with Essex Minerals Inc. Essex trades on the Toronto Venture as ESX and as ESXMF on the OTCQB. Do hope you'll enjoy today's program. It will be available in about an hour in on-demand replay as well at amvestcapital.com/replays, and we'll also be sending it to you in a follow-up email. Feel free to chat in your questions in the question pane of the GoToWebinar control panel, or simply email them in and we'll ask the questions in real time. Amvest, of course, is a New York-based specialist investment management and corporate finance firm focused solely on the natural resource sector. All important disclaimer, this call is most definitely for informational purposes only. Very pleased to have with us today Paul Loudon, Director and CEO of Essex, mining analyst with more than 35 years of experience in the resource sector, corporate finance, structuring and arrangement, investment analysis, and has worked at all sorts of firms across from Sydney to London. Other previous firms include BDI Mining, Diamond Corp, and he was head of equities for mining finance house Loeb, Aaron and Company in London. Again, please send in your questions. We'll ask them live of Paul. And with that, let's hear from Paul. Paul, if you want to turn on your webcam so we can see you, we'll jump in. Afterwards, we'll hit you with some good questions.
Okay, great.
Welcome virtually to New York City.
Thanks so much. Thanks, Campbell, and thanks to everyone who's logged in today, and the team at Amvest for organising this webcast. So I guess for most people here, I expect this is the first time you've heard our story. Essex is a company that we structured, we got control of, and we've restructured and refinanced over the last year. So there it is. You know, we've now, as I said, we've restructured it, we've refinanced it, and we've put it on a growth path, which we hope that you'll agree is pretty exciting. We're an experienced management team. We've got lots of skin in the game, and we've put our own cash into this company, and together with our associates, we control about 25% of the stock. So in Essex, you're going to get a ground floor entry into 3 potentially very large gold projects in Australia, as well as exposure to not 1, but 2 startup streaming and royalty companies. And importantly for US investors, as Campbell said, we have an OTCQB listing in addition to our main listing on the Toronto Venture Exchange. So you can buy and sell our shares within the US. Currently, we have a very small market cap, but we have very large ambitions. We have around 2 million in cash, and we're fully funded for our current exploration program. And most importantly, the drill starts turning next week on one of our projects, the Mount Turner project in Queensland. And we hope that's going to generate some pretty exciting news over the next couple of quarters for us. Here's a quick snapshot of the share structure. Unusually for a company of our size, institutions are already holding about 45% of the stock. And that's a result of the close relationship that our team has built up in the sector over the years. I mean, as Campbell said, we've been involved in the sector over quite a long time. And given the modest market cap of 7.5 million, and almost a third of that is represented by cash, we think there's lots of upside potential in this stock if we are in any way successful in executing our strategies over the next couple of quarters. Like all juniors, management is critical to the success of the company, and along with myself, the Essex team has a long history in the mining sector, from identifying and developing projects and arranging mining finance to growing and managing successful public companies. But in addition to our in-house team, we work with a strong network of industry professionals. And on the call today, I'm delighted that Rod Husband, one of our technical advisors, is also on the line here, and he's also president of our Stream Finance joint venture partner, Zola Minerals. So what's the strategy to grow Essex from today's market cap of 7.5 million to an enterprise with hopefully many multiples of that. The strategy is twofold. First is to use our extensive network of industry contacts to identify highly prospective mineral projects in tier 1 locations. We want properties where we can earn an initial interest by spending money on drilling. And second is to use that same network of contacts to identify projects where we can earn our interest by structuring or arranging mine finance in the form of a stream or royalty investment. In all, pardon me, in all cases, we want projects that can generate a maximum bang for the buck. So we want highly prospective drill-ready exploration projects or streaming investments which are close to cash flow and can provide high alpha returns for the cash we arrange or invest in them. In the case of our exploration joint ventures, we're going to be very disciplined. If we like what we discover in phase 1, we will then increase our interest by either spending more cash on exploration or make an offer to acquire the partner, like we just did with KNX Resources in Australia. Or we can do a spin out as a shared dividend to our shareholders, like we are currently doing with our renewable streaming subsidiary, Optegra Capital, which you'll hear about in a moment. Or if we don't like the results, we'll drop the project and move on without having blown up the share capital of the company. So over time, as the twofold strategy is executed, ASIC shareholders progressively become exposed to a portfolio of projects in both targeted exploration and streaming. So let's start with looking at our exploration projects. In North Queensland and the Northern Territory of Australia, we have 3 large gold projects and a potentially very large copper gold moly project. Following on from the initial exploration success we had with these properties last year, in Q2 of this year, we agreed to acquire our partner KNX Resources, which now gives us an 88% interest in the Compass Creek and Cumberland properties and 100% interest in the large Mount Turner project. What particularly attracted us to KNX were the Queensland properties. And why Queensland? Well, Queensland's a region in the northern part of the east coast of Australia, which has produced a large number of gold discoveries historically, but it remains relatively underexplored compared with other parts of Australia, like Western Australia. North Queensland hosts a number of large deposits, like Kidston, which was a 5 million ounce producer for Basildon, and the Pajingo mine, where they've already mined about 3 million ounces. The targets in the project areas that ASIC now controls are large epithermal gold deposits in back arc settings, which is the same geological setting that's hosted these other existing large gold deposits in Queensland. They're volcanic deposits associated with the breakup of the old Gondwanaland continent and the creation of the Australian continent as we know today. So that geological activity created large regional structures through which gold emplacement took place about 300 million years ago. So here, inland from Townsville in North Queensland, in this epithermal setting, we have 2 very large tenement holdings. This Cumberland project area here, that's about 25 kilometres down there, and then the Mount Turner project to the north of it here. Historically, there were several small high-grade gold mines in the area in the 1800s, but only limited modern exploration and small-scale mining in the 1980s and 1990s here and here on this Drummer Fault. Then, despite being prospective for copper and gold, the areas have not been subjected to any gold exploration for the past 20 years because the whole area was tied up for uranium exploration, mainly by Mega Uranium. But then as Mega dropped the ground, it was picked up by KNX Resources, who did the original exploration and generation of drill targets for us over the last 4 or 5 years. So ASIC joint ventured these projects in May of last year and funded an initial drill program here on this Cumberland property. And we also funded a large-scale staking of additional ground here to the west of the original Mount Turner property. So in the current year, we're going to drill a large gold target that we have here on this Drummer Fault, north of Mount Turner, including the ground that we staked last year, which is now fully permitted for drilling. And we're also going to conduct some geophysics, both here over the Mount Turner porphyry and down here in the Cumberland property and follow up on some drill work, some drilling that we undertook down here last year. So the next few slides, initially we'll take a quick look at this Cumberland property, and then we'll come back and have a look at Mount Turner, where drilling is about to start. So the Cumberland project is all related to this Cumberland caldera. We funded 2 drill programs here last year, and these were the first ever drill holes on this property, and were based on anomalous gold and silver soil anomalies, which were found to be associated, or initially seemed to line up with this north, west, southeast trending regional structure. And remarkably, the first drill hole, which was drilled here, intersected 6 meters at 18 grams of gold a ton, almost 2/3 of an ounce, which got a lot of people pretty excited about our stock for a while, and raised expectations. And then the rest of the program of the initial 6 holes, which was spaced up to over 1 kilometre apart, all intersected gold and alteration, which suggested we're pretty close to a big mineralizing system here. But unfortunately, they didn't hit the same bonanza grade that we hit in the first hole, as is often the case in exploration. The second phase follow-up of that initial high-grade hole then, which was down in here, certainly hit more gold, but it indicated that the structure hosting the economic zones of gold was complex and probably cross-cutting east-west through here, as opposed to the main trend of the soil anomalies, which was along the big regional structures. So it just shows that the structure is complex, and it's under soil cover, so there's not a lot of outcrop here. But based on the results that we've seen today, we think there's a strong chance that this property hosts an economic deposit of gold. We know the rocks are right. We know there's plenty of gold in the system, but it's complex and requires just a bit more groundwork before we drill again. So this year we're extending the soil survey, tightening up the grid, and looking at using geophysics to better target the next drill program while we concentrate on Mount Turner. So this is the Mount Turner project, which is about 10 kilometres to the northeast of Cumberland. It's another large ground holding we have here. And we've got two big targets. First of all is an epithermal gold target along this Drummer Fault in the northern part of the tenement. And the second is this Mount Turner porphyry itself. You can see from the aeromag and the soil sampling here is a buried intrusive, which has all the hallmarks of a classic porphyry system with a copper, gold, and moly core to it. So, in the longer term, we want to do a bit more work this year in targeting where we're going to drill in here while we drill off this immediate gold target along here on the Drummer Fault. This is the Drummer Fault. This satellite picture shows you the Drummer Fault as it extends for about 19 kilometres within our project area. And these are the photos of some shallow oxide pits that were mined in here in the 1980s and the 1990s. On the western end of the fault here, these drill holes were drilled in the 1970s by Esso and then by Mega Uranium. And there's in fact a small uranium resource along here on the western end of the fault. But our main area of interest is here on the eastern end, where these shallow oxide pits were worked in the 1980s and 1990s. And remarkably, there's never been any drilling below these pits. So the drilling that's about to take place is the first ever drilling. So we're going to concentrate first on the Drummer Toy pit. This pit's about 250 metres long and was mined only down to about 20 metres depth on a zone that's about 20 metres wide. So ahead of the mining back there in the 1990s, the operator did some vertical air core drilling, and this drilling returned some pretty decent intercepts, including 16 metres from surface at 3.5 grams per tonne, 6 metres at 4.9, 6 metres at 10 grams a tonne. So the oxide material was mined, as I said, down to about 10 to 15 metres and delivered grades on average between 2 to 3 grams in the mill. When they got to the sulfides, they then stopped, as they didn't have milling capacity to grind them. They stockpiled the sulfide material hoping to come back later, but unfortunately, as often happens in our industry, the gold price fell and the project was shut down. So we've sampled that sulfide material and we've got assays up to 1/3 of an ounce. So we know there's certainly gold in the system. So the drilling program that's about to start, we're going to position the rig here, first of all, and drill a fan of 3 holes under the old mined out pit, and then move the rig across here to the southern corner, of the pit, and drill it and scissor another hole back across this way. So these these holes will then be followed up with additional holes depending on what we see in those initial 4 holes. So it's either going to be that we continue to drill back underneath at depth, or we're going to move along strike, or a combination of both. If we look at the project in section, this is our interpretation of the geology and what we're targeting with these first holes. So in essence, we're looking for near surface broad zone of mineralization across here, about 20 meters wide. And typically, as was indicated in the earlier drilling, we would expect to see high-grade concentration of gold on the hanging wall and on the foot wall of this steeply dipping structure, and then lower grade dissemination of the gold across the center of the zone. Structures like this, which are steeply dipping vertically, can easily be open pitted down to about 200 meters. So we have the potential to be drilling off economic ounces here pretty quickly if we get the positive results that we're hoping for in this first drill program. In particular, if we get mineralization in the core like this rock over here, which is one of the rocks we've taken off the sulfide dump, we're going to have some pretty exciting news that we'll be announcing here over the fall, and hopefully that'll get some people pretty excited in the stock. And if the gold persists at depth in the sulfides as we hope, then this becomes a very straightforward exploration project for us, with the potential to deliver ounces at a very low cost of discovery. And finally, our third Australian gold project is Compass Creek in the Northern Territory, up here near Darwin. This property sits on the Pine Creek geosyncline, which is a large regional geological structure which has hosted up over 5 million ounces of gold in various deposits over the years. Our ground holding is this red area here, and it sits about 25 kilometres north of the Union Reefs Mill, which is owned by Kirkland Lake, and all this ground to the west of us here rather, is also held by Kirkland Lake. That's the Chinese Howley and the shutdown Cosmo Howley mines. To date, geophysics has been done over the property and soil sampling, and it's shown that there's a pretty large IP target, about 1.5 kilometres by 1 kilometre deep, which looks like it's a lookalike structure to many of the gold deposits that exist within 20 kilometres or so of here. We're not going to get to drill Compass Creek this year, but it stands as a potential drill project for us for next year, or perhaps a joint venture opportunity. If we get good results in Queensland and we decide to concentrate our resources there. So all in all, between the 3 projects under our belt and potentially exciting news about to flow from Mount Turner, we're pretty pleased with the potential of the initial portfolio in the company. And then the second part of our strategy is to find opportunities to arrange stream financing. As many of you know, metal streaming is a purchase agreement where streaming company makes an upfront payment that provides the right to purchase a fixed percentage of metals from a mine, or at a spot price, or percentage of the spot price, or a fixed price over the life of the mine. Streaming companies are highly rated on the Canadian market and trade at much higher multiples than standalone mining companies. And the biggest growth comes in the startup stage, which is where we are in Essex. So on the right here are the charts of 6 well-known streaming companies over the first 3 years of trading. The top 2 here, Franco-Nevada and Royal Gold, were huge companies to begin with, but even they doubled their market cap in the first 3 years. Down here, Mavericks and Sandstorm, which started from scratch, much like we are right now in Essex, achieved 5 to 6 times share growth in their first 3 years from putting streams in place. Finding the right streaming deal takes time, but when we get the right one, it will be the start of sustained cash flow coming into Essex. And to assist us in finding the right streaming deal, we signed last year. We signed a joint venture with a private streaming group, Zola, whereby Essex has the right to earn an 80% interest in the streams which Zola identifies and arranges, in exchange for us arranging the finance for the upfront payment. Our target commodities are gold, copper, and battery metals, and our primary countries of interest are Australia and the Americas. But we're always happy to look at any other special situations that come our way. So we're constantly evaluating opportunities and have a number of term sheets on the table as we speak. So hopefully the first streaming deal will come to fruition within the next 6 months, and that's going to be a game changer for this stock. And with Zola, we also identified that there was a first mover opportunity to apply metal streams to the renewable energy space. And to pursue these opportunities, we recently incorporated a subsidiary, Optegra Capital, to negotiate stream investments in the biomass and waste to energy sectors. And once those streams are negotiated, we intend to spin Optegra out as a separate company and distribute those shares to the Essex shareholders. So that's going to happen, we hope, sometime in the next 6 to 12 months. So anyone buying Essex shares today is going to receive a dividend of Optegra shares when that spin out happens. So finally, just wrapping up, that's the Essex investment case, a management team with extensive experience in mining operations, a clear strategy for growth and a demonstrated ability to execute, exposure to initial portfolio of exploration properties in Australia with the potential for large high-grade gold discoveries, drilling about to start underneath existing mined oxide pits where we think we have a high probability of success and a potential low cost of discovery, an agreement in place for staged entry into streaming with Zola, approval in place to dividend the Optegra Capital shares sometime in the next 6 to 12 months, which will give shareholders exposure to streams also in the renewable sector, and all of these opportunities within a tight share structure and modest market cap with $2 million of cash on hand, which is sufficient to execute the strategies as for the current year. So hopefully you think the story is as exciting as we do, and we'd really welcome any questions you might have. So thanks very much.
Sure, thank you very much. And please send in your questions and we'll ask them. We'll start right now. How much money have you to spend at Cumberland to earn the 60%, Paul?
We spent an initial $1 million that got us a 40% interest in Cumberland and Compass Creek and 50% of Mount Turner, and then we acquired the balance of our interest there for 5 million shares that we issued to acquire KNX. So now we've earned that interest. So we own 88% of the properties of Compass Creek and Cumberland now, and we own 100% of the Mount Turner property when that KNX acquisition closes.
Which project are you focusing on more than the others, and why?
Yeah, the real focus right now is the Mount Turner property. We think it's a pretty straightforward exploration project. All of these properties have the potential to host big deposits, but epithermals can sometimes be complex, and that's what Cumberland is showing us. Whereas Mount Turner, the Mount Turner along the Drummer Fault, there is a pretty straightforward exploration play. It's been drilled out and mined, in a number of pits in the past, and when they just didn't have a sulfide plant circuit in their plant, so when they got down to the sulfides, they stopped and stockpiled it, but never got a chance to go back in because the gold price fell on them, and the project was shut down. So it's a pretty exciting target for us, and drilling about to start. So I think
have you processed the oxide material at Mount Turner? Were you able to find more oxides?
What's outcropping there was mined by the old guys. A lot of the structures, the whole Drummer Fault there's about 19 kilometers along structure, and really they only scratched the surface of it where those oxides were outcropping. So we think there's quite a lot of potential in the oxides, just along the whole structure. But the sulfides don't worry us at all. There's nothing metallurgically complex about the sulfides. It's just that the company that was mining it previously didn't have a fine grinding circuit in their mill. So if we find plenty of ground in the sulfides here, it's just a matter of putting a decent sized grinding circuit in, and you'll liberate the gold from the sulfides.
Great, thank you.
Thanks for the presentation, Paul. So how did you come across these projects originally in Australia, and how did it become to be listed in Canada?
We came across these projects because we knew this team. So having been involved in working in investment banking and mining finance in Australia and in London, we've met over the years. I've met personally and helped finance many teams from Australia and from Canada, the US, and when we decided the timing was right to put a vehicle together to raise some capital to back teams who had been working privately for quite some time, putting good deals together. And the team at KNX, which was led by a guy called Lee Spencer, who I'd known over 20 years in the industry and backed Lee previously in a couple of deals. He showed me the properties, and they were looking for a partner to come and spend some money on drilling. So we were able to tie them up on an earn-in and joint venture basis, which is the way we like to do these projects initially, which is earn an interest by spending some cash rather than blowing up the share structure. And if we like what we saw, which we did, we can continue adding to our interest in the property. So it really came from the fact that we have a network of people that we've known over a long period of time in the industry, and we trust their judgment and their ability to find decent projects, and we back them.
Yep. And then what are the holding costs of the projects?
Holding costs are not huge here, because we've more than exceeded the expenditure requirements on the properties. There's quite a lot of money being spent here in the last 12 months or so, but we're going to spend in this next program. We'll be spending about $700,000 on exploration, mainly on the Mount Turner project, but also some additional follow-up soil sampling on the Cumberland property, and that more than covers the expenditure requirements for these projects.
Yep, got it. And then do you need other permits for drilling, or you're ready to go?
No, we're fully permitted for drilling here. In fact, we're fully permitted for drilling on all 3 properties.
Nice.
Yeah,
that's good. And then, if you looked at developing Mount Turner, kind of how would you look at that in terms of restarting any operation scenario?
Well, I think you're close to infrastructure there. There's a main Georgetown highways running through the middle of there. So, it would be a matter of putting an initial CIP plant into there. And the great thing is that we think that Mount Turner, the Drummer Fault project is probably, it's somewhere like 0.5 to 1 million ounce potential, which is more than justifies its own mill. And meanwhile, you're not too far away from the Cumberland area, where we also feel that it's got great potential to generate ounces for us. So it's easily within trucking distance if you put a mill in for Mount Turner. So some sort of central milling and processing operation there would be able to service both Mount Turner and that Cumberland area, which is, I guess, why we're really focusing our resources there on those North Queensland projects rather than the Compass Creek one in the Northern Territory, because we really think that we can get a pretty good bang for our buck up here in North Queensland and have the potential for discovering ounces pretty quickly at a relatively cheap cost.
Yeah. And then on the streaming model, how do you give confidence to investors that you're going to be able to pull it off, given it is quite a competitive space?
Yeah, it is competitive space, you can never give guarantees, but we're involved in numerous processes, and we have some, as I said, we have got some term sheets on the table right now. I think even the big guys are struggling to find decent deals at the moment. So we're concentrating on smaller deals, and I think that once we get the first one done, getting the first one done is always the hardest. After that, I think we'll start to get some traction on getting some more deals done, and there are great opportunities here to be done in Australia, where streaming hasn't been used as often as it may have been in other jurisdictions. It's just a matter of convincing the first client to work with you, and I think hopefully in the next 6 months we're going to get it there. But even if we don't, we have generated some great success in putting a stream together in the renewable space, and that's what's inside the Optegra subsidiary, and that will be dividended out to shareholders. So anyone buying Essex today is certainly going to get some exposure to streaming through Optegra. But we feel pretty confident that in the next 6 months a deal is going to fall into place for us on the streaming side.
Yeah, fingers crossed. Thanks, Ed. I'll pass it on to Adam.
Okay.
Well, thanks, Paul, for a great presentation. Maybe you could just go through. Obviously, you've got some pretty juicy targets here that you've put together. Mount Turner, you've said, is your first priority. Presumably, really, drilling deeper, defining the sulfides to figure out what you got versus trying to find more oxides. Maybe sort of a lower risk strategy there. And maybe talk a little bit about once, let's just say you've got your drilling done there for 2021, and it looks like somebody can at least visualize a potential resource. Is the idea there to then option that project out and step to the next, or what's the vision here?
Well, I think the vision on that one, Adam, is if we get initial success with this program and the follow-up program, we'll assess it where we go from there. But I think this is one where we could drill it out ourselves. That would be prize number one there for us. And then or bring in, if it gets too big, then you bring in a partner. But I think that Drummer Fault project, sulfides or oxides along that structure, is a project that we could drill ourselves. Certainly we'd have to go and we'd raise some more money, and we'd look at if the stock price responded as you would hope it would, and we're back up in the 40s or somewhere around there, then we'd look to certainly drill the next round of drilling ourselves. I would say would be the focus at the moment, or the vision, and potentially joint venturing off the porphyry target to a bigger company, a major. If we can attract a major in there, they could be drilling that off while we focus on putting together a resource that we could finance ourselves and put into production.
What's the spend, the planned spend to trying to hit the porphyry?
Initially, we're going to we'll do the non-drilling work ourselves to begin with. So next step there is we're going to do some geophysics, and and extend the saw grid. So the saw grid's been the guys have been working the field there for about the last 8 weeks, and then we'll do geophysics. But we won't be able to do the geophysics until Q1 of next year, just after the wet season, because the ground is actually too dry for effective penetration by IP we want to do up there. So we'll do that in the first quarter next year. So that total spend this year is going to be about a couple of $100,000, and hopefully that then generates some initial drilling targets into that porphyry, and we'll make a decision in Q1 next year whether we want to pop 1 or 2 holes into it ourselves, or bring a bigger partner in to take that risk. Ultimately, drilling off a porphyry is not for a junior. It's always going to be a bigger company target at some stage.
Yeah, certainly. Although if you hit a porphyry, you can certainly get a lot of metal value, because you can generally drill down hundreds of meters if you've really aimed right, and get a lot of meters, a lot of mineralized meters.
Yeah, for sure. And if the geophysics is successful for us and really clearly identifies the target, then I think we would certainly give the first exploratory hole a go ourselves there, and that would be something we'd be doing next year.
Mm-hmm.
Yeah, and I'll just add there, I think it's all results driven, like Paul said earlier. I mean, we're in the process of finalizing soils over that. Paul mentioned geophysics there. Because it's so dry there in the summer, IP doesn't work really well. You don't get very good penetration. So the idea there is to do the soils right now, assess them, and then plan an IP program for just after the rains in February-ish. Then you've got your makings for targets for drill holes. And then, Adam, like you said, probably drill the first hole or 2 yourself. And if you hit something, then again, you reassess. Is it something that you want to build out a little bigger before you go looking for partners, or is it something that you flip out right away while we focus on a gold resource?
Thanks, Rod. Rod, while we have you on the line here, maybe you can give us some feel for the drilling costs at your property.
Well, the good thing there is a lot of it can be done with RC. So RC is quite cheap. Diamond drilling rigs are fairly hard to come by. So we've secured a combination rig to do this first program. So we're going to do the first bit of the hole with RC, and then finish it with diamond through the zone that we want. And we'll do 2 or 3 holes like that. And then once we have a good handle on the geology, we can start banging off RC holes. So RC costs are about all in somewhere between 50 and 75.
Is that US, Australian?
Well, it's universal, so call it Australian because it's down there. Diamond drilling all in is a little bit more expensive. It's going to be in the 250 to 300 Aussie. Well, actually, I shouldn't say, because the RC, the problem with RC is although you drill quicker and you drill cheaper, your assay costs tend to be higher because you're assaying a lot more of the chips than you would if you're visually inspecting the core first. So probably 75 to 100 bucks for RC versus 250 to 300 for diamond.
Great. The targets that you have on, the target grades that you're looking at for the Drummer Fault sulfides, are those reflecting the grades of the sulfides that were sampled by the previous operator?
Yeah, absolutely. Unfortunately, they only drilled 20. The maximum length of a hole was 20 meters at 45 degrees, so they didn't test much depth and they didn't test much lateral extent. The pits are 30 to 50 meters wide, so you see hanging wall and footwall mineralization on each side of that. So we're looking at a zone that's 30 to 50 meters wide with lower grade in between two high grade vein / breccia zones on each side. So the stuff that we see that was drilled ranges anywhere from 1.5 to 4 grams in the entire length of a 20-meter hole. So whether the hole penetrated the hanging wall or the footwall first and then drilled off into the shear zone, that's what they were getting. We anticipate we'll be able to get those kind of grades across the entire zone, because there's never been a hole that's been drilled through both hanging wall and footwall. So 1 to 4 grams is our target for the broad intersection, and then on the hanging wall and footwall, anywhere from 5 to 15 grams over. We've seen widths of 2 to 8 meters even. So it really is a beautiful looking target. I mean, no better place to find gold than where they mined it. So they stripped off the oxide and left all the sulfide underneath the pit. And there's lots of potential along strike where Paul mentioned as well that there was overburden, so they didn't really do any work there. They weren't interested in getting into a situation where they had to strip overburden before they could mine. So, gold price in the late 90s wasn't economic to take even 4 or 5 meters of overburden off for them. So we've got a tremendous target, a lot of kilometers along strike, oxide pits all the way along it.
Are you going to try to? Are you going to try to target potential oxide zones where you can then that are undercover, where you can then follow through to the sulfides underneath to try to get the most bang for your drilling buck?
Yeah, absolutely. I mean, basically, it's to confirm the mineralization under one of these pits. The best pit is the Drummer Toy pit, so that's where we're starting. Once we can confirm that it is there underneath, then the next is just continue along strike and continue down dip, connect the dots between the pits. If that includes oxide, so much the better. But the reality is the oxide, there's not a lot there because it's only anywhere from 10 to maximum sort of 20 meter depths is the oxide. So it's, while yes, it's easier to process, and there could, if we find it continuous over 5 kilometers, there would be an abundant amount of oxide, but the real jewel is the sulfides for sure. They're going to go a lot deeper and be a lot more of them, a lot more ounces.
Just flipping to the stream strategy. What's the thought process there if a deal comes, falls into place? Are you going to reach out and try to do a secondary to raise the capital for that deal?
Well, we have in place some lines of credit available with some funds and some banking associates that we have. So the idea would be to maximize our leverage position into them. So borrow the funds to put the stream in place and minimize the amount of equity that we would have to raise. We'd always probably need to raise a little bit of equity, but as far as possible, maximise a leveraged entry into it for Essex.
Yeah, and I guess that's the same sort of strategy as with the renewable. If it makes the most sense for everybody to spin out a subsidiary, then that's what you do. If Essex has success drilling and it looks like it's going to the moon because it's finding so much gold, then probably you lean towards spinning it out so you're not diluting one with the other to start with. But if the deal's small enough and robust enough, then it's a good fit directly into Essex. And the nice thing about doing a stream that's spitting off cash in the first couple of years is then you can start rolling that money into other value adding propositions, whether it's building resources or other streams, right?
Let's confirm what you're saying. You're really looking for almost mezzanine type of situations where you can be the last money in before they start producing and throwing off cash.
Correct.
Yeah, that's pretty typical for streams. Well, I shouldn't say that actually, because some of them are going in a lot earlier nowadays. But for us, yeah, that's our target. Is we're looking for 24 months maximum before they generate gross profits to us, and preferably it's more like 12 on the outside. And some of the deals that we look at are companies that are looking to either pay down debt that turns out to be a little bit more expensive than they thought it was going to be when they took it on, or expansion capital, so you can start generating revenues right away.
Yeah, I guess if if a deal comes, falls in your lap that looks good, but it's in it's not in gold, it's aren't you worried the shareholders are going to look funny? Shareholders are going to worry if you're funding a stream in some unusual commodity, versus what your major exploration focus is on.
You go, Rob.
Yeah, I was just going to say, I don't think that really matters, because I think it's really about the amount of cash that's coming into a company. I don't think, while we might be focused on looking for gold and be a gold company, if somebody walked in the door with whatever, call it a moly or
battery metal,
any kind of metal that wasn't gold, if it was robust enough for us, we would do it. That might be where we sit around the table and decide, is this one that we just spin out and give every shareholder a share in a new company that's going to be focused on that commodity? But cross that bridge when we come to it.
All right. Thanks, guys. Let me pass it on to Erdi.
Thank you. Did I understand this right? The old operator never intended to put a resource estimate on the Mount Turner. It doesn't. It looks bigger than a test pit, but is there no resource?
No, they never put a resource together. It was a small listed company called Union Mining who were mining it. They had a small vat leach plant in Georgetown, about 10 kilometers away from the property. And in the mid to late 90s, they were it was pretty difficult for them to raise equity capital in the markets to go and drill off a property. So they just used some shallow air core holes to identify the oxides, and then trucked it themselves down to their vat leach plant and sort of lived hand to mouth, really. Gold price was falling. Times were pretty tough for them. So yeah, it was. They just found those oxide zones and followed it till they hit the sulfides. They didn't have a grinding circuit, so When they got to the oxide, when they got to the sulfides, they just stockpiled and stopped mining and moved on to the next oxides. And I guess they were hoping that they would have generated enough cash and the gold price would have, you know, come back up for them, that they could have put a grinding circuit in and then come back and drilled it out and mined a deeper, bigger resource. But unfortunately, it never happened for them.
Yeah, and that could be timing. I mean, they were mining there in the mid 90s, so by 98, 3X hit, and the mining markets went, you know, into hibernation for 5 or 6 years. So, you know, their plan and aspirations back then would have been a lot different, but they did what they could, and then that's it. Everybody went quiet.
Yeah. Okay.
We went into the nuclear winter, as we call it.
For the Cumberland project, in your opinion, what indications made you to hit the bonanza grade in the first drilling campaign, and why you put 1 kilometer spacing between holes after finding the bonanza grade?
Well, the program was planned in advance. There'd never been any holes in the property before, so the initial program was five holes. Just really, they were stratigraphic holes, so for the first ever see underneath the gold in soil anomalies. The holes were drilled. All 5 holes had been drilled before assays came back from the first hole.
Got it.
Everyone was pretty amazed by the results that we got from the first hole, because it wasn't really designed to hit a specific structure. It was designed to give some core to look underneath the soil cover, because as you can see in the photo on the left here, the whole area is sort of flat and soil covered with next to no outcrop at all. So the guys just were looking to see what structures were down there that were causing the gold to appear in the soils. And you know, I think everyone was shocked really with the results from the first hole. We all got very excited, of course, but it just turns out that the ground is a lot more complex.
Yeah, I was just going to say it's a lot more structurally complex than originally thought. Like when you look at the soils and you look at the very limited outcrop there, it looks like there's a very definite northeast trend to everything. But when you start digging deeper, and we started doing second and third generation geophysics on old geophysics work there, some of the east-west structures started to pop out that just are not visible. So it looks like those east-west structures that we have up at Drummer Fault play a more significant role than originally thought. So that's why bringing in a structural guru to look in great detail at what we drilled and in great detail at the limited outcrop that's there is going to drive us to where we go back to Cumberland and how we drill. Because that is it's a great hole, but you know, based on the knowledge we had, we couldn't follow it up with anything nearly that good. We did get some gold sniffs in a couple of the other holes around it, so we need to just triangulate a little bit better, if you will, on the structure.
Got it. Thank you. I want to pass it on to Stuart.
Yeah, thanks. Just one question someone sent in. Will US shareholders be eligible for the stock spinoff, and will the spinoff be listed on a stock exchange somewhere?
Yes, all shareholders will be entitled to the spinoff, and when we get it listed, we'll list it first up in Canada, and then we'll follow up with an OTCQB listing for it. So traded in the US.
Gotcha. Thanks for that. Thanks everyone for your time, and please make sure to send in your feedback when requested. We'll get it to the company. And Paul, if you want to have a closing remark before we sign off.
Again, just thanks to everyone for dialing in and listening to our story. Put us on your radar screen. even better, go and buy some shares, and we'll do the very best to grow this story over the next couple of quarters and generate some investor interest in the story, and hopefully we get some great results coming out of Mount Turner to release to the market in the fall here. Thanks very much.
Thank you.